Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Omar Realty. So everybody sit back, relax. We got a lot to talk about today, okay? First, of course, obviously we're gonna do the mortgage rate update. Number two, there was this really funny thing that somebody sent me, and I don't know if it's real, I don't know if it's fake, but it was this little, I think it was like a Facebook or Instagram post or something like that, that we're gonna go ahead and go in. I purchased my house recently, 6 months, and I am concerned that house prices will drop. When they do, who do I contact to get my principal lowered? Is that real? Will the realtor or the bank give me the refund on the? Okay, we're gonna go ahead and talk about that on what the next steps on that is. I guess, you know, I apologize. You know, I'm ignorant because I feel like everybody should know everything about real estate, and that's why I make this channel, is to go ahead and educate you degenerates. This is how we do things. But we're also going to talk about the steps you do if everything goes underwater. What is going underwater or being upside down on a house? What happens if the value of your property decreases? What if the market completely crashes and it goes to shit? We're going to talk about short selling. What do you do with short selling? Foreclosure. What's a foreclosure? And then the big one that nobody talks about, this little secret, trade of the trick of the trade, one of those things. But let's get on with the mortgage rate update, and then we'll go on with the rest of those things, okay? So 10 different mortgaging products. 30-year fix will be sitting at 5.50%. 15-year fix will be sitting at 4.38%. 5.50% on a 30-year high balance. 8.87 on a DSCR loan. Bank statement loan is going to be at 8.25, and I apologize for those that are new to the channel. That DSCR loan, a debt service coverage ratio loan, is a loan that is specifically for people who are looking for loans to go ahead and use the rental income that they have coming in to go ahead and pay to qualify them income-wise to the debt that they're going to go ahead and acquire. For instance, if your principal, interest, taxes, and insurance are $1,000 and the rental income that's coming in plus all the associated costs are $1,000, well, then you're at a 1-to-1 ratio, and I mean, it's not that great to work with it. You always want to say 1.125 and above, but that's what that is. So that'll be sitting at 8.875. Bank statement loan, that's another one of those non-QM, non-agency loans. That'll be sitting at 8.25. That does not require your bank statements, no W-2s, no pay stubs or anything. We just look at your bank statements. I don't know if I said that, but we only look at your bank statements, and your bank statements, we calculate total income versus the debits that are coming in. And that's how we calculate that. FHA 30-year will be sitting at 4.63%. 7.6 adjustable rate mortgage will be sitting at 5.50%. USDA 30-year fix will be sitting at 4.75%. VA 30-year fix will be sitting at 4.65%. And then hard money fix and flip. If you see a crappy property and you want to go ahead and just fix it up, that'll be sitting at 4.70%. But let's get on with this little Instagram, Facebook post or whatever. I was in a group message and they sent it to me, and it says, I purchased my house recently. 6 months, and I'm concerned that house prices will drop. When they do, who do I contact to get my principal lowered? Will the realtor or the bank give me the refund and difference? And then there was comments, there was like thousands and thousands of comments, but you know, he's like, sorry, but it doesn't work that way. No one will lower your principal. And then the guy responded, why not? If my house goes down, I should be refunded the difference. That unfortunately, it is not how it works. If the home value goes down, these are your choices. You could keep paying your mortgage payment just the way that it is, go on about your merry way. Number two, it's gonna be short selling. You're gonna have to call somebody to make sure that they allow you to sell it for less than what you actually owe. Number three, you could say, forget this, call the bank, foreclose on it, I'm not paying you, peace out, deuces. And then the fourth one is if you do have what's called an assumable loan, you could always just give it to somebody else if you want to. But let's go ahead and get on exactly what each one of them are, okay? And how do you do it? That's the biggest thing, is how do you do it? By all means, don't do it yourself, okay? Find somebody who knows what they're doing, how to talk to them, what time frame, what to say, how to say things. But for the gist of it, for the sake of argument, I'm gonna tell you exactly what each and every one of them are. So number one is gonna be a short sale. A short sale is exactly that. You are shorting the amount that you owe on the property, and then you are going to go ahead and sell it for whatever the market value is currently to whomever would like to go ahead and buy it. So what you have to do is you have to go ahead and talk to the lender. You have to send a couple of documents over to them. You have to go ahead and say, hey, this is the market that we're in. We are not able to afford it, or we're not going to go ahead and do whatever it is that we want to go ahead and do. We want to go ahead and sell this for less than the principal amount owed. Then the bank or the lender or whoever is holding your note, whoever is a servicer, will have to go ahead and agree to that. Now they could say no. They could say, forget you, I'm not going to. Number 2 question, what if I have a first and a second? Well, then that's when things get a little complicated and it's easy. And if you did want to go ahead and contact somebody and listen to this is going to be my shameless plug here. For up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance, link in the description below and let me help you out. Or if you need a short sale, let me know. I'll be more than happy to help you out. Or even if you want advice, even if you want somebody to just like ask a couple of questions, hit me up. You don't even have to use me. This is why I make this channel, is to help you people out. But what if you have a first and a second? Well, the second lien position, okay, the second lien position is the worst position, okay? Nobody cares. So what we do is you would go ahead and call that second lien position holder and tell them, you know what, let's say you owe 30, 40, 50, 100,000, whatever it is. You could go ahead and settle out with them. You could almost just say, you know what, forget you, write that one completely off, because what they'll do is they will take that total amount that they owe in that second lien position and they will write it off as a tax credit, because they know that it's a loss anyway. Because whenever you're selling a property, you know who the first person is that gets paid? Well, that's the tax man. The tax man is always the first person to go get paid. Then the second one is going to be the first lien position holder. All the other lien position holders, we don't give a damn about it. If there's a mechanic's lien, if there's a second home equity line of credit, or you did whatever, I don't know what it is that you would do that got you a lien on that property. That's what you go ahead and I'm doing. The next one, it's going to be foreclosure. Pretty self-explanatory. Let's go ahead and just call it what it is. Deuces, I'm out. You go, and they go ahead and foreclose on you. It affects your credit. Now, to backtrack, does short sale affect your credit? Yeah, it does, and it can. And it could affect you in a big way. And what it says that this debt was not settled, or this debt was not paid, or this debt was not paid in full. This will probably show up on your credit. Now, don't take my word for it. I'll make sure that I put the whole entire thing with TransUnion and Equifax and those 3 little monkeys that decide what credit score that you're good enough to go ahead and get approved for. I don't know, whatever. Equifax, Experian, and TransUnion, whatever. Those all-encompassing people who judge you financially. And then the last one, of course, we all know foreclosures are really, really terrible. Foreclosures will go ahead and ding you. You could go ahead and file for bankruptcy. Bankruptcy, then you actually know that you have a 7-year threshold, you know, depending on what type of bankruptcy that you do, 7, 10, whatever it is that you end up doing, you can go ahead and say, forget it. You file for bankruptcy, you will get hit you're gonna get so many calls, people trying to lend you money after you file for bankruptcy. It's insane. But you can foreclose if you like to. And then the last one is, let's say you're a little bit upside down, or what if you don't even want to be at the property anymore and you are having trouble selling it, and you have this and that, and you don't want to deal with anything, or whatever the case may be. Now, considering if you have what's called an assumable loan. If you have an assumable on a FHA, VA, those majority of the time are assumable loans. Some of the products, depending on the lender, you could ask them, you could call them and see what they are. If it is an assumable loan, you could just sell that loan to whomever would like to go ahead and purchase that, take that home. Now, they do have to qualify for it as far as income goes and all those parameters, but you don't need an appraisal on the home. You don't need anything. You just need to go ahead, and because they already know they're chalking it up as a loss. They already know that they're underwater. So all you're doing is you're transferring one name to another name, and then you're just going to assume the remaining principal balance that is all left on that home. Now, if there's a first and a second, you could actually come out on top. If there's a first and a second, if you're like, okay, this guy owes $900,000 on this house, but now it's only worth $700,000, but they have $500,000 on that second loan. Well, then this is where things get a little tricky. You could assume the primary right off the second, and then you're in the clear. Blowing minds left and right over here. But It's going to be your mortgage rate update. I hope that this content helped. If you had any questions or anything that I could answer, comment below. Let me know. For up to 50% commission rebate, 0% listing on selling your current home, or any mortgage assistance, link in the description below. I'm bored, dude. If anybody needs a mortgage, let me know. Please don't let me do OnlyFans. I don't want to go ahead and sell my body. It's about to get to that level. Till next video, guys. I appreciate you guys watching. Peace.